Mr. Castelli, you work closely with central banks and sovereign investors worldwide. So how do you assess China's evolving role in global sovereign portfolios today?
Well, thank you for the question. China is a very important economy in terms of size and, of course, in terms of its capital market. And the share of RMB denominated asset in the portfolio of central banks and sovereign institutions in general has been growing over the last few years. If I may say that if I look at the last 10 years, we had a very big rise from 2015 when the RMB was included in the SDR basket. It actually started from almost zero to up to around 3.5%. Then over the last few years, we saw some slowdown. But actually, over the last in 2025, over the last few months, we start to see a positive sign of resuming of this trend. There is more interest about China, both in fixed income, which is largely what central banks normally invest in, but also in the equity market. I think we are at the beginning of this positive trend for China, and I believe that is sustainable, particularly if we continue to see improvement in the Chinese economy and progress in reforms, which as far as I can see in these days, reading the newspaper in China that you're doing the plans for the next 5 years, it is actually happening.
Just last week, China's fourth plenary session outlined steps to modernize governance and also strengthen financial regulations. So I'm curious, from a global markets perspective, what signals do these developments send to investors?
I think that a steady path of reform in China is very important for continuing to attract capital into the Chinese capital markets. And also, if I look at the plans that you mentioned being in these days, there is definitely this continued focus on attracting capital in the key sector of the Chinese economy. This is more about the equity market, but just think about the green transition or high-tech, semiconductors, artificial intelligence. There is a very strong story of China catching up with the US in tech, and this is definitely an area where I think investors are looking at the moment. Finally, you look at the performance of the Chinese stock market. This is a very positive sign because so far we saw diversification away from the US asset because investors want to have more diversified portfolio. This diversification has mainly involved Europe and Japan and other advanced economy. Now we are starting to see this trend to broaden to China and emerging market. So definitely China is an opportunity that I'm pretty sure it will grasp in the future as these capital flows continue.